This is Martin from Sri channel for learning about trading and investing. Welcome to the daily market analysis show. This is for February 25th, Friday 2022, tomorrow. Yes, it was bloodbath in the markets today. The bears have taken over the markets, and the reason for that, the war has already started. That fear and uncertainty has impacted all the markets across the globe, and we are no exception. Okay, so let's get into and see so as usual, the pre-market analysis would be based on all these parameters that is on the. We will be looking at them in the charts. We'll also have some data analysis on all parameters that you see on the right side, and we'll just wrap up, and then some actionable also can be seen in the slides, right? So look at this, the candle, look at the gap down, right? Such heavy gap down, right? So that comes to how much? That's a 3% of gap down in Nifty and a 3.5% of gap down in the Bank Nifty, right? And then followed by the gap down, you have a bearish candle, right? Wide range, heavily bearish candle that you are seeing there. All the supports on the way is gone, right? What all supports are gone? 50 DMA is gone, 38 DMA is gone on the Nifty, 23 DMA. Oh, sorry, it's not DMI. Fibonacci 38 and Fibonacci 50 gone on the Nifty. Fibonacci retracement levels 23 and Fibonacci retracement 38 both gone on the Bank Nifty. So can you imagine what's the point? 2,164 points loss. That's 5.79% of fall is what Bank Nifty incurred. 4.78%, 815 points in the Nifty gone just single day. So that's one of the biggest sell-off that has happened in the recent. Even the COVID times, I remember it was somewhere at the 700 range, but it went to the subdued level, and because the percentage of 10% was what happened that time. But now the market has moved to a higher level, so the percentage is, even though the points are more, the percentage is not. It's very close to 5% only. So it's a big sell-off is what happened in the indices today. One of the biggest sell-off, you can say, and all major resistance levels. 16,800 is lost fine. 16,400 is 400 points down, and then we also hope that it would maintain that level at least, right? Although the open list was giving an impression that the 16,500 may hold for the expiry, this is a monthly expiry, and then somewhere that may be maintained, but even that didn't happen. 16,400 was not maintained, 300 was not maintained. So there was a point when there is doubt whether even the 16,200 also would be made or not, but it managed to close somewhere near to that. So 815 points in Nifty, 2,164 points in Bank Nifty, lost in a single day big sell-off. That's exactly what happened. Intraday action, if you see, so if you see the intraday action, this is what happened. Big 3% gap down, then trended further bigger downfall, 3.5% gap down, and then remaining further to 2.5% of big sell-off. That's clear bearish trend in intraday price action. Bollinger Bands, you can see that it was consolidating the sideways zone within a volatility range for quite some time. Now it has burst out or broke down, and the volatility is expanded on the downside, giving a big breakdown. That's exactly what is happening. It's a clear bearish indication. Please break down that the Bollinger Bands is talking to us. Support resistance levels, if you see, it's somewhere near to the support of 16,150, 16,200, which is a previous gap. There is a gap there, so that gap is still not closed. When the big up move happened, there was a gap there, so that gap is somewhere close to that gap is where market entered today. So 16,150, 16,200 is going to be very good support, and that's going to be the best support down. And if that's gone, then you have the major Fibonacci 61 retracement level that's coming in 15,850 to 15,950, that level. So that is a major support. Fibonacci 61 below that would always indicate that the bear cycle is fully inactive if it closes below that, right? So it's very crucial that it maintains the 15,850 level. So this level, this band level is very important, right? So that's two major, one gap support and Fibonacci 61 support. And below that you have 15,500, 15,650 support also is there. This is the previous resistance. So that's the support downside. On the upside you have resistance that's there, upside 16 350, 16, 450, which is Fibonacci 50, which is broken today. And then above that you have a resistance 16,550 to 16,650. Then above that 16,700, 750, and then above that again Fibonacci 38 level of 16,800, 16,900 levels there. Above that is rounding number 17,000. That's all. The resistance is the upside on the Nifty. Bank Nifty, you can see similarly it's taking some kind of support at 35,000, which is the Fibonacci 50 retracement level. It had breached this Fibonacci 38 and Fibonacci 23, but it is taking support of Fibonacci 50 levels. So if that support is gone, then you go back to the 34 750 kind of range. 350 to 750, that's a big range. So that support zone is there. That's also a previous swing low also. But if that is gone, then you have the 34,000 kind of level near to that, right? Then comes 33,600, Fibonacci 61 retracement level is there near to that. Right. So 33,800 there is Fibonacci 61 for the Bank Nifty. That's all the retracement levels. Well, not retracement, these are all the support levels on the downside. Similarly, upside the resistance will be 36,800 of Fibonacci 38, which it lost today. So that's resistance now. Then 37,000 will be a major resistance zone, and then 37,500 of Fibonacci 23, which it lost today, where it took support yesterday. That will be the resistance. Then above that you have 37,800, then 38,000, and then 38,500 and 39,000. That's all the resistance on the upside. Downside we've already seen. That's the support. Make a note of this support resistance levels before taking the positions. Momentum divergences have slipped to the bearish zones. You can see in the Nifty it slipped to bearish zones from the sideways, and Bank Nifty also it slipped to the bearish zones. Right? Now the divergence is seen as of now, but medium time it maintains sideways because the week is ending tomorrow only. So we'll be able to have a clear picture on whether it will maintain the sideways momentum in the weekly tomorrow. But as of now, it is only one day left, so weekly momentum, medium term momentum is sideways, and otherwise short-term momentum is clearly turned bearish on both the indices. Trend indicators was already bearish yesterday, also it was bearish, so both indices are having bearish momentum, but it was not having enough strength. But now you see that we can see that the strength of the ADX is rising up. Right? Strength is rising up the Bank Nifty also. So the bearishness is increasing in the short term, and it is clear bearishness with that the indicator is talking about. Now volatility, if you see 30% of look at the fear and the greed indicate. What is it? 30% of single day big shot up, right? And 31.98, 32 is the level of the big India VIX now. This is crazy levels. Anything beyond 20 is crazy. Implied volatility 26.76, implied volatility percentile is 99.6. It's the peak. The peak fear is what volatility is what you're seeing right now. Now, the volatility is always a mean reverting that they say. It could go and form a range and then come back and then cool off and then again go back. That's how volatility, has been doing. That's how it always does. You can see that it maintains certain levels for a certain period of time and then either breaks out or breaks down, right? And then maintains that level, and so it works in ranges and it's mean reverting nature. But having said that, does not mean that now that it has reached a very high level, it will cool off. There's no guarantee that it can go up to 80 also. COVID times it went up to 80. So you never know where it's going to mean revert. So you not have the false impression that now that it will cool off and then you can gain from the volatility crush. That may not happen, right? So that's why we say always stay away from trading if it is above 20-25 range max. So be cautious. Operators analysis may not have mature levels. This is March 3rd. The active trading for that will happen from tomorrow only. March 3rd expiry. And tomorrow is going to the first. So later today may not be relevant, but just for reference sake, I'm just mentioning the range would be 15,500 to 17,500, where the highest put and call rating is there. 16,000 and 17,000 also is very good put and call rating, right? So put call ratio is bearish on Nifty, 0.46 is bearish. Short buildup is what features of mental data is showing. Bank Nifty, the range is 33,000 and 37,000, very wide reach. And this may not be anywhere near to accurate because you don't need that kind of there's not that much of volatility to have to have 4,000 points of difference between both. So but anyway, 33,000 is where the highest
put writing support is seen and 37,000 rather resistance is seen as well. 35,000 and 37,500 also has got put and call writing next to the previous levels that we mentioned about. 0.53 is also kind of bearish, very close to bearish, you can say. Put call ratio on the Bank Nifty. Short belt is what future industry on the Bank Nifty. See the red all over, it's red, no? Clear bearishness you can see all across all the sectors and across all the Nifty heavyweights. You can see that the HFZ bank, which is facing the resistance, has slipped off the trend line and it has gone to the bearish zones. And HDFC also has slipped off the trend line, gone to the bearish zones. It was trying to climb up, taking out this resistance. It's gone now, lands well within the channel, but it is from the bearish candle and the bearish momentum also. Consolidation happened in the Nifty. It is still holding the sideways momentum for some reason. TCS has slipped off again. Another big gap down. It has fallen off the channel and it has taken the support. Now we have to close watch whether this support is a major support zone. If that can hold or not is the question. It has gone to the bearish momentum also. Now Kotak Mahindra was shooting up and then trying to move up, but it didn't happen. It is closed red today and falling back to the previous support zone, and then momentum is sideways, not as bearish. So ICICI Bank is slipped off the major support zone and momentum is turned to bearish. So Kodak is maintaining sideways momentum and not bearish momentum. Is interesting. Even Infi also is not fallen to sideways. And so some heavyweights which are maintaining the sideways momentum. That means that they're really strong. Right. So keep a watch out on Kodak Bank, Infi, and these two heavyweights are maintaining the sideways momentum instead of going to the bearish. So overall IT sector 4.6% down. It was across sectors a lot. Metal 5.2% down single day. Auto 6.2% down single day. 3.6% pharma down. FMCG 3.3%. Reality, look at this. Right, the emerging sector that was heavily bullish the last ever since the COVID crash recovery has happened. Ever since budget has happened, reality was shooting about 7% of fall down single day. So all the momentums are now in the bearish zones. You just can't do anything. Just wait for the momentum to catch up to the bullish zones. That's all. Institutional selling, the data is not coming. We'll just quickly check whether it will be interesting to see the data, who sold off how much. The data is still not out, but definitely it is going to the FIs might have done heavy selling of at least about 3,000 crores for sure, or 4,000 crores for sure, and DIs might have sold it, but that may not have been enough with the combined FI and the retailer panic. Retailers also might have sold big because of the war fear. But yeah, so FIS non-stop selling is the single most bad thing for us. Now we can see that the price, the USD INR currency rate has shot up again once again, trying to break out of this resistance zone, and then next charges will be the charges of COVID kind of levels 76, 77. It is breaking out of 75 again, and at the edge of breaking into the momentum also is near to the 60. Now look at the current US dollar index. Dollar index has shot up, big moves. It is breaking out, and probably it may take that famous distance on also. The momentum has shot up. Trend is also, dollar is strengthening, rupee is weakening. That's the crazy thing that's happening, along with the crude which is breaking out above or at the 100 levels, dollar per barrel kind of levels, with crazy momentum. So crude, and look at gold, what is happening. We had talked about this previously. So I mentioned that whenever the gold is breaking out of this famous 1917 resistance zone, if that is taken out, it would definitely mean a crash in our markets, and it would be a big move that may be happening. That's exactly what the gold is breaking out. That means the market is giving up 800 points in a single day. Natural that gold will it's a universal hedge instrument, and then it's breaking out. But everything is turned because of the war, the crude oil, the currency, pair, crude oil, and the fire selling all combined is look at this global indices that you can see. Dow Jones has given up the major real support zone which it has been holding for all. The momentum has gone to the bearish zones. Now Nasdaq, if you see, it has fallen off the trendline channel, and S&P 500 also fallen the trendline channel. Momentum is bearish. Momentum is bearish on the Nasdaq also. So it's like 400, 200, 400 kind of fall is happening in the last 2 days. So US markets is in severe trouble and it has given a major support. So definitely it's a major correction that's happening in the US markets. And across the globe, the sell-off is happening in the other markets, also Asian and European markets are all selling off. Two actionable short positions for HDFC Asset Management. It's having very low volume. The volume is really worrying. Even if it is selling, it has to have volume. But the momentum is bearish and trend is clearly rising strength bearishness, right? In a channel trendingly going down. There is a major support zone where it is there. It is drawn in these two black lines. If that's broken, you can take a swing short side position. Another one is Mahanagar gas. It's moving down in a trend line with good volumes, bearish momentum, and then bearish trend. So it's also at a major support zone that is marked here. So if that support is broken, that is where you have to take a trade, not immediately as soon as tomorrow opens. If it happens that that gap is broken, any time in the next few days, it will be a swing trade that can give some good profits on the short side. No, so that's a wrap up the bearish short-term bearish view is what my clear bearish view. Reasons charts are saying that, but chart patterns are saying that wide range bearish candle. Support resistance levels are saying that all supports Fibonacci levels breaking just like that. Momentum indicators are saying it's bearish. Trend indicators are saying it's bearish. Bollinger Bands is saying it's bearish. So you just can't help but have a view of clear bearishness. So there may be a consolidation that may happen because of the big that gap pounds can happen, right? After such big falls, normally market consolidate for some time. But if the bearishness is has taken off the major levels and it is continuing, the indicators are showing that bearish, and it is highly likely that it will further go down in the coming days. It may not be tomorrow itself, but yeah. So definitely the war has already begun in Russia, Ukraine, and US markets have already broken the major support levels, and heavy selling pressure is there globally across all markets. So because of the uncertainty of the outcome of the war and the fear of the escalation of the war to something else, that's why the big sell-off is happening. Volatility is above 30 means that itself says what is happening in the market. There's no doubt about it. Right? Unless it cools off to 20 levels or below that, it is going to be bloodbath for sure in the coming days, right? So it's Fyers continuously selling, selling bigger each day, and if retailers and DAs also turning bearish means, then that's the end of story. That's exactly what happened today. Positive factors are not seen much. There's nothing much positive that is seen as long as this uncertainty is there. Right? Market has already given up major levels. Now, it could go anywhere, right? It would go and find supports at these levels that we talked about, right? So keep a close watch on the support levels. Very heavy Fibonacci 61 retracement levels for Nifty and the BANKNIFTY. That will be the place where we have to look, and gap support also can give support. So if you see that there is some from some candle that gives indication of a bounce, it will be evident by a hammer or some kind of triangular three candle formations and all that, some divergence and all that will indicate that there is a chance of. So only then you can even hope. As of now, there is not even any hope of consolidation can happen, but keep close watch of these levels of 61, both the lines, what I would say, right? So that's the market and that's the view. So stay away from the markets, especially in the option trading unless the week cools off. Hedge the portfolio with some gold, if the market is crashing further down, because that can balance out your long-term investment in stocks, if you're having incurring losses at this stage. Also, you can pick up some good quality stocks on the dips in a sit mode, or whenever the corrections like this happens, right? So options trading setup, interest spreads, and all that, if you're using, be careful. Define and know your risk and be ready to take the risk when it reverses or goes out of your hand. And overnight positions, definitely hedge it. And intraday, tight stop loss with limit and range, all that we have to give, otherwise free trades and big slippages can happen at this high volatility levels, right? Tight stop loss, and basically need to know when the reversal happens based on the candlestick patterns if you're playing intraday. Otherwise, it will be difficult to catch. So that's a bearish view for the next day. If it helps you to frame your trade plan and your market view for tomorrow in some way, then consider hitting the like button and sharing to maximum number of people, so that we have some subscriptions. Like as of now, it's a shameful number of subscriptions that we have, and all your comments, feedbacks, and sharing, and more subscriptions will keep us motivated. Thanks for watching. Happy trading, happy learning. Bye.